and tantalum capacitors, as well as a top 3 supplier for MLCCs and inductors. My name is Howard Kao, and I'm the coverage analyst here at Morgan Stanley. Joining us today is President and CEO David Wang, Co-COO Eddie Chen, Co-COO Claudio Lolini, and CFO Gavin Zong here with us today. And as usual, we look forward to their insights and comments on the company as well as the market. Speaking first today is Gavin, who will first walk us through second quarter results. After that, David will join for a brief set of forward-looking remarks. And after that, we will open the call to questions from the audience. At any time during the webcast, you can send in your questions in the text box on your screen. And now I would like to turn the call over to Gavin and David for opening remarks.
Yeah, thank you, Howard. Thank you, everyone, for joining our earnings call today. I will start by sharing our Q2 financial result. Let's move on to the next slide, please. Next one. Okay, so we have had another good quarter. If you look at the revenue, we have generated $44.5 billion in the second quarter, a record high. Q-on-Q, we're seeing 16.5% increase, and year-on-year is a 35.7% increase. On the profitability side, you can see gross margin ratio is 38.5% in the second quarter, a 0.4 percentage point higher than the first quarter, and also 2.9 percentage point higher than last year. Operating margin 26.4%, Q-on-Q increase of 1.2 percentage points, a year-on-year percentage increase of 4.9 points. This is largely due to higher gross margin and also better OPEX efficiencies. On the EBITDA margin, similar result, 32.3%, a half a percentage point better than the first quarter of the year, and also 4.1 percentage better than same period last year. In terms of a net income dollar amount, we have generated 9.4 billion NT dollars in the quarter, 17.7% higher from the last quarter, and also 88.5% increase from last year. Similar performance you can see from the EPS. We generated $4.59 per share, similar percentage of increase from Q-on-Q and also year-on-year. All these figures demonstrate a fantastic quarter. Let's move on to the first half of the year result. So on the revenue side, we have generated $82.6 billion in the first 6 months, a 29.3% increase from the same period last year. Gross margin is 38.3%, a 2.7 percentage point higher than last year. Operating margin is 25.9%. Because of a higher gross margin and also operating efficiencies, we're seeing a 4.7 percentage better result compared with the same period last year. EBITDA margin 32.1%, also 4 percentage point better than last year. Net income dollar, we generated $17.4 billion net income. It is a 65.5% increase from last year. Similar improvements on the EPS, total $8.5 per share, a similar 65.4% increase from same period last year. For the result for second quarter, for the result from the first half of the year. Now let me show you the revenue breakdown by product and segment. So the charts we have on this slide, we're showing the percentage. This is really a function of relative performance. A few things to highlight from this slide. First, in absolute dollar value term, we see a Q-on-Q growth from all product segments and all customer segments. The other thing is, AI continues to be one of the key drivers for our higher revenue and customer demand. In second quarter, AI represented 16% of the total revenue. And you can see that clearly from the revenue share from computing enterprise. The ratio has increased from 24.9% to 27.3%. And it's based on a larger revenue base. The other thing I think I'd like to highlight is we're also seeing stable and continuous growth from other sectors. For example, industrial has been growing in 6 consecutive quarters. And we're seeing similar pattern from automotive industry. Let's move on to the next slide. Here, I'd like to share with you the sales breakdown by regions and by channels. Again, in absolute dollar value term, we see a Q-on-Q growth from all regions and from all channels. A couple of things to highlight here as well. First, Asia has been growing faster in second quarter. This is driven by Taiwan, China, and some of the other Asian markets. Second thing, if you look at the revenue share by channels, not only we're growing each individual channel, but we're maintaining very healthy and balanced revenue source structure. I think this is also one of Yageo's great strengths. Now let's move on to the next slide where we show the free cash flow and the leverage multiples. So thanks to our very strong profitability and operation efficiency, we have a very strong capability to generate cash. As you can see, we have generated $5.8 billion free cash in the second quarter. It is a little bit lower than the first quarter, but this is due to 2 reasons. One is we have spent more on CapEx to increase our capacity. The second is we have been securing some key raw materials, for example, tantalum, to support the production and the customer demand. At the same time, we have improved our inventory turnover days by almost 10 days in the second quarter, thanks to the higher demand from the market. On the leverage, you can see our net financial debt against the EBITDA. The ratio has been further improved to 22%. This means our EBITDA can cover almost 5 times of our current financial debt. So very strong and very healthy over the board. With that, I'll pass over to David to provide guidance for the coming quarter.
Thank you, Gavin. Thank you, Howard. We just entered the second half of this year. And for second half, today we see the demand remains very, very strong. And I'd like to share with you a number of positive signs from the market. First is the book-to-bill ratio in Q2. And we see in Q2, the book-to-bill ratio improved month by month. By end of June, it's even up to 2.2. So this is very, very positive sign. And secondly, we have a good conversation with certain key customers. And they are confident in their investment in the new project. And they really like us to support them both in engineering and the capacity. And the third positive sign is that we experience that customers show increasing interest to deal with the long-term agreement with us. And they are even willing to pay premium to secure the supply. So because of this, we see the second half, the demand, the market situation remain very, very strong. And consequently, so in Q3, we will further increase our utilization rate, both in commodity and specialty, above 90% to meet such demand, also to build up even the healthy inventory to meet their demand. And you know that in Q2, in the quarter 2, we adjusted the price to offset the cost increase. Now, if we see the material cost will be further increased, certainly we might consider to further adjust our price. So based on a very strong quarter 2, we still guide the Q3 revenue guidance a moderate growth. And consequently, accordingly, the gross margin and the operating margin, we guide this slight increase. Thank you, Howard. This is the guidance we'd like to give to the participants. Thank you.
Thank you, David and Gavin. And we will now move into the Q&A session. Again, as a reminder, please send in your questions in the text box on your screen, and we will get to them shortly. Just maybe to clarify, David, can you walk us through the utilization rate guidance again for the third quarter for standard and premium?
Yes, both premium and the commodity, the utilization rate will be above 90%. So this is the increasing, I remember, from the 85% from last quarter, so further increase.
I see. And this seems to be quite a large uptick on the commodity side. If I remember correctly, second quarter was somewhere in the 70%, now moving to 90% plus. Now, as both categories are now sitting at 90% plus, does Yageo now have plans to expand capacity for any of these two segments? And if so, how much capacity expansion can we expect, and when will those come online?
Howard, let me clarify first. The last time in Q2, the utilization rate for commodity actually is 80%. So this is the increase from 80% to up to 90%. And Eddie will answer the capacity increase.
Oh yes, I think our UTR last quarter was somewhere around 85% for both commodity and specialty, and just like what David just alluded to, I mean, demand is very strong. And so far, we've been engaging with some strategic accounts, even with some discussion on long-term contracts. So it is tight, and I think the tight capacity has enabled us to continue to rationalize our allocation of products. So yes, we do have the intention to continue to increase the capacity. Actually, for the first half, we were able to marginally increase our capacities with some optimization of our fab, and with limited capex for the first half, of course. And it's in the pipeline. I think we'll continue to monitor the demand situations, and we'll continue to expand the capacity on a gradual basis based on the demand supply situations.
Got it. And if we can, thank you for that. And if we can take a step back and look at what's changed, it seems like the market sentiment demand has gotten materially better versus 2 to 3 months ago when we did our, I guess, Q1 earnings call. Can you walk us through exactly what has changed and why has demand and customer willingness to work with you on LTAs and securing capacity? What has materially changed over the past 2 to 3?
Yes, Howard, I can add some color to that. The market just continued to confirm the positive trend. We were cautiously optimistic in previous calls. You're right. We were monitoring how these programs were developing. We were in a lot of conversations with our customers in terms of several projects that were supposed to ramp up over the year. And at that time, we just wanted to make sure that we had a better understanding on the deployment of such programs. So it happens over the last few months and weeks, several of those programs actually started to ramp up as scheduled. And in some cases, even we noticed some acceleration on demand in certain areas. Memory, solid state drive is a good example of that. Combined with a very healthy point of sales figures from our channel. Just a reminder, our channel is a very powerful go-to-market element for Yageo. We cover all geographies. We have $1 billion plus
distribution business in Greater China, and we have $1 billion plus distribution business outside of Greater China. We utilize both very local distributors as well as relying on global players. And this channel combined continue to show very strong growth, and that drove quite a demand for replenishment. If you see the Q2 mix in terms of channel, you can see that. So when you put all of this together, and the book-to-bill that David alluded to, that give us the confidence for the remainder of the year and the overall outlook. Nothing significant that changed compared to before, more just a continuation of good news and good development from our customers.
Got it. Thank you. And since you mentioned the book-to-bill, I think last quarter it was still around maybe 1.3, 1.5-ish range, and now it has improved to more than 2. Is this for every single SKU, or is this AI specific? Any color on that? And how do you think that will go? This book-to-bill will trend over the next quarter.
It is not only AI, but certainly when you look at the development of the segments Q on Q, you can see which segments continue to show a lot of strength. And as Gavin said, it's important also to remember the dollar base. You can see the internal movement on the percentage of the segment, but dollar-wise, every segment is growing. So book-to-bill is a function of that. Also a function of the conversations that David mentioned with some of our customers and key partners. They expressed an interest to secure their need for passive components over a longer period of time. This is because this industry is notorious for being unable to secure the entire supply chain in tight demand times. And so therefore, several of our customers are now in conversations with Yageo to see under what condition they can secure their need for the next, call it 6 months, year, in some case, multi-year needs as a baseline. And in some case, they place some order, and that also contributes to the better book-to-bill. Always difficult to predict the future, but so far I think we have all confidence that the signal from the market will continue to show strength for the months ahead.
Got it. Thank you. And in terms of these longer-term contracts that your customers are now showing interest to sign with you, I guess a couple of questions here is, one, is this something that is new for the industry, or has this been something that has happened in the past? And the second question is...
Sorry.
Sorry, go ahead.
Go ahead. Go ahead with the second question. I'll take both at the end.
Okay. Sorry. Yeah. So the second question is, any color on what kind of customers they are, or what kind of particular product are these LTAs for?
Yeah. No, it's nothing new. We have seen such requirement in the past, and there is not one way to go about it. Depending on the customer needs and the type of demand, there is anything that can range from long-term orders with some covenant around to more formal agreements. And the duration could be also something that changes depending on each case. So nothing new. And in terms of which customers, this time, the customers that are mostly interested in securing supply are customers that are experiencing these high growth rates, mostly driven by AI-related applications. These are customers in the computing and enterprise space, involved in memory SSDs. These are players that are trying to make sure that once their program kicks in, they can support all the range of passive components that goes with it. And so it happens that Yageo over the years was able to build such offering. Because of the combined portfolio, we can now sit down and have conversations that range from resistors, circuit protection, capacitors in any dielectric, all the way to magnetic solution, inductors, and sensors. So this is a very unique position for us. Product-wise, the conversation typically start with a need around capacitors, because capacitors in several dielectric, not necessarily just MLCC or tantalum, they tend to be the one that is mostly considered to secure first. But the conversation very quickly goes through all the product portfolio. So they may start around capacitor, but they end up embracing all the other technologies.
Thank you. And do these agreements typically only revolve around volume, and price will be, I guess, based on market price at the time, or are both price and volume discussed with these LTAs?
Both, Howard. As we said, David mentioned that in most cases to secure the supply, there is a premium that is considered. There is a lot of uncertainty when one look the next 12, 18 months on the cost side of things. So again, depending on the agreement, the specifics of the agreement, we tend to have conversations certainly around volume, but price is part of that equation too. There are several conditions for a baseline price and some premium price built into it. But at the same time, also there is an understanding that should things continue to develop outside of our control on the cost side, then the price will also be adjusted. It really depends case by case. The underlying motive for this agreement is not so much to try to find an arbitrage on price, is really to try to find security in the supply chain. This industry moves very fast. When there is a peak in demand, it can happen that some historical customer may lose space in our backlog and production in favor of other customers that might decide to be more opportunistic or simply move faster and occupy a larger piece of the production. And for Yageo, it's important to make sure that customers that have been with us a long time have a way to secure their needs. So the way to look at this contract is really to ensure supply more than trying to gain the market and extract a better price for either party, really.
Got it. Thank you. A couple of housekeeping questions here. So maybe I'll just come back to the forward-looking questions in a little bit. But first is in terms of your second quarter premium versus standard product mix. Can you give us the breakdown of that, and also your AI revenue mix in the second quarter?
I'll take the second one, the AI revenue mix, you said?
Yeah.
Okay. Continue to develop, continue to grow. Just as a reminder, measuring revenue from AI is not a precise exercise. You have to make a lot of assumptions in defining what kind of product or what kind of customer have revenue for AI. So we are also continuing to refine the model. And with that said, we estimate AI revenue percentage for Q2 to have climbed another points and now sitting at least 16% of our overall business. Also comment here, very happy to see the development of AI, very strong outlook. But when you look at our growth, Yageo has a story that is not just AI. AI is great, and we participate in that. but I also want to take this opportunity to emphasize how the growth that we are seeing comes from a variety of segments and sectors, really showing the resiliency that we were able to build over the last few years. But it's about 16% now.
And Howard, your first question is the premium and commodity ratio. And last time the information we gave is 20% and 80%, 20% in commodity and 80% in premium. Actually, in this quarter, this number remains in a similar level because you will see our growth in Q2. Basically, the growth is from the older segment. So within just 3 months, the percentage remains similar.
Got it. So much. Can we come back to your third quarter guidance? First, on your revenue guide of up moderately quarter on quarter, if you were to break that down by units versus price, what do you think that breakdown would look like?
Yeah, so we're actually seeing the growth from both sides. Definitely, as David and Claudio mentioned, we're seeing higher PB ratios. This helps on the quantity. At the same time, due to the price adjustment and also the different product mix, we believe that the price average units will also be higher. So I would say there's a moderate sales will come from both sides.
Is it fair to assume that price adjustments and the impact from higher pricing will be more evident in the third quarter versus second quarter?
Naturally, because it would take time for the price adjustment to take effective. So I would say that's a fair statement. But at the same time, I think the quantity increase is also quite significant.
I see. And just on that line of thought, would it be fair to assume that the margin uptick that we can assume for Q3 versus Q2 should be higher than the sequential margin expansion that we just reported for second quarter? Just because there's more pricing impact?
Well, David has given clear guidance on the margin. Our price increase will help to cover the input cost increases, that's for sure. And we believe the margin will be slightly better than the second quarter.
Got it. Thank you so much. In terms of outlook in the third quarter by end segments, is there, aside from AI, any particular ranking or segments that you can call out that is growing a little bit stronger or weaker than your expectation maybe 2 or 3 months ago?
We have seen relative weakness from laptop, consumer, smartphones segment. And probably this trend will not change in the next quarter. So with that said, the other segments, and again, it's growing in dollar. Even the consumer business, as Gavin said, on a dollar base is compared to a year ago is on the upside. But short-term guiding Q3 by segment, I would say that we'll continue to see the development of, we expect to see the development of computing, but also our industrial segment has been quite a story, growing for the last number of quarters with a strong comeback from Europe. Aerospace, defense, and medical, although it's on a smaller side, is continuing to show strength. Nothing particularly different, Howard, I would say, in Q3 when it comes to segment versus Q2.
I see. Sorry, and just to follow up, coming back to the revenue guidance for third quarter, it looks like utilization is picking up quite nicely in Q3 versus. And when you add on top of that pricing adjustments, is it fair to say that the moderate growth quarter-on-quarter guidance is on the achievable/conservative side?
I think it's a fair our guidance. Couple of things to highlight. Absolutely right. Our utilization rate has been high. Also, the supply has been tight, right? So that means it takes time to deliver to the customers. As also Eddie mentioned, we are increasing our capacity by investing CapEx. But the sort of quarter revenue guidance, I think the moderate increase is still justified.
Then another note for your reference, our quarter-on-quarter growth is 16%. So actually the base is very high. So even a moderate growth in Q3, that is, we consider is still a very nice number there.
Got it. Thanks. The question here on whether with how much share price has declined recently from the peak, and given how strong fundamentals are, does Yageo consider any share buybacks to signal confidence in the company's long-term prospects?
No, we don't have such plan in place.
We don't have a plan in place, as David mentioned, and I think the market up and down, we can't really comment. Our focus is really, generating good result and good return for shareholders.
Got it. In terms of PC, I know you mentioned, Claudio, that this segment, along with other consumer segments, continues to be weak. But has there been further deterioration that you've seen in the past couple of weeks?
I would say weaker. So not necessarily weak per se, but weaker compared to other segments that are adjacent to it. So when you do that comparison, certainly it stands out. The gap stands out, right? But as a whole, as a segment as a whole, not necessarily weak like we would define a segment that is contracting severely. So not that. And we expect it to stay flattish for Q3. And we do have actually insights, and we do have hope on this segment to come back. In particular, the laptop and notebook, we are a strong player there, and we know there has been some redesign in the architecture, and we have some new products coming out with a higher different packaging in tantalum that offers a higher capacitance in a smaller package. So we are quite excited about that development. And so for next year, maybe not so much for this year, but for next year, we're also looking at the laptop and notebook segment with confidence. Perhaps not Q3 or Q4, but more at 2027 consideration.
Got it. Thank you. In terms of new end segments like silicon capacitors, can you talk about any progress or development in that area?
What?
The silicon.
Yeah, I think for the silicon capacitors, we do have certain products available, especially with the deep trench type silicon capacitors. We think that that's pretty much on par with the market standard, and there is efforts internally to continue to consider the trade-off between the thinness and the capacitance density. So I think that's a pretty consistent effort internally. But in terms of the product availability, I think we're pretty much on par with the market right now.
Got it. For this particular product, is this something that will only continue to grow in terms of demand and usage over the next couple of years, or is this only, or do you think it's only for a certain subsegment of applications?
Hard to say. I mean, there is certainly growing interest into this area, which spikes our interest as well. So I can't foretell that. We'll just continue to monitor the developments. But it is a pretty interesting field, and it has fitting into the niche as we observe.
Got it. And maybe still early, but just any preliminary view on how to think about profitability versus your other end segments, other product segments that you have today?
I think it's too early to say at this stage.
Got it. Okay. Thank you. And in terms of your exposure in the power supply space, can you talk about your positioning there, and whether or not there is more room for you to gain share within that segment for power supply passive components?
Yeah, it's an exciting space, Howard, actually. The whole, we talk a lot about AI and that gets a lot of attention and headlines, but the infrastructure around it is also very exciting. Everything that goes from the grid down to the rack of the server, all that flows is very demanding in terms of power management. And there is a lot of stages. There are a lot of stages with step-down functions, voltage-wise and conversions, and that creates a huge need of filtering, managing ripple current, and making sure that there is a stable signal that goes all the way through. And when you think about all of that, I think about capacitors in various dielectric, right? But certainly having a strong portfolio in caps is a great position. And in particular, our line in film capacitor or aluminum electrolytic capacitor is having a lot of growth from that side. And now you can also consider the whole magnetics product offering in terms of inductors and connectors. We also do connector products, and so all of these combined makes it for a segment that we don't call out specifically. Is embedded between computing, is embedded within industrial, or even telecom in our own segments. But it's definitely something that we are excited about, and we see growth. In terms of how much share we are gaining or not, a bit difficult to measure because of the spread of this segment across of this application across various segments, I would say. But we have a very good position in all of these technologies, and we have ambition to improve our position. So it's a good story that we are happy to be part of.
Got it. Thank you. Very clear. There's a question here. Can you please touch on the competitive environment for each of your segments? What is the outlook in this environment for each segment over the next 2 years based on capacity additions planned?
Different type of competitors by segment, but maybe one couple of considerations, Howard. I think I'm not going to comment on the specific of any given competitor, but the way to think about it is that more and more it's important to be a player with scale. Customers have very compressed timeline now for their programs. It doesn't matter if it's automotive or AI servers. Nobody has the luxury anymore to look at a 3-5 years platform deployment. and then redesign 5 years later and then give time to the supply chain to catch up. Now, every customers we have compressed timeline, and they look at deployment within 12 months or 18 months. So you have to be on your feet. You got to be quick, but at the same time, you got to be able to scale with them. If you can't scale with them, then there is not a lot of confidence in the customer in placing order to you. So companies that are successful these days tend to have that feature. Yageo certainly has this combination of scale and agility, which I think is very hard to find out there, if you ask me. There's a number of competitors, and I would say that the landscape is also pretty much the same. We talked about it in previous calls. The barrier of entry that you have around certain technologies, I'm thinking MLCC, tantalum capacitor, for instance, is a very significant barrier of entry. There is a lot of chemistry, material science associated to it. The capex required to be in business is not small. And so it is very hard to envision new players coming in and really being able to gain significant share in a short amount of time. I don't believe that would be the case. And so it's a matter of making sure that you continue to innovate, you continue to secure capacity, you continue to have solid customer base that push your roadmap and come out with new product. But not again for new makers. Very tough.
I would just add that I think our portfolio has helped to enhance that competitive position as well. I mean, the offerings enable us to engage in very meaningful dialogues with our customers across the board.
Yeah, I think those are excellent points. And I think if you combine that with what you guys mentioned earlier, that customers are trying to sign long-term agreements and secure more supply going forward, I think makes it even harder for new competitors to come into this space, right? But just to touch on the LTAs, or just coming back to the LTAs, do you think this is coming more from direct customers, or are distributors and ODMs, EMS also looking to sign LTAs with you guys?
At the moment, is more from the direct customer side, which doesn't mean that they will need to source the products directly. They can still use the channel that they've been using. Either is a distribution channel or EMS, that doesn't matter. But the beginning of the conversation typically is from the direct customer. Now, when we look at our own experience with this type of agreements, it's not limited to direct customers. We had such agreements with EMS, ODMs, or even distributors. What we want to make sure we do is to ensure stable supply to the right partners. We don't want to lock ourselves up with any particular agreement, and because of that, being unable to then secure other customers' needs. So we are very careful in selecting what kind of agreement we are entering with who and at what conditions, but not necessarily limited to the customer, although starts with them.
I see. So from your conversations with your customers, do you think, because there are, I think, a lot of customers who in the past will let their assembly partners or ODMs or EMS companies procure MLCCs on their behalf, while there are customers who does it directly. Do you see a shift towards more direct approach instead of having the ODMs and EMS partners handling the procurement?
We haven't seen, and I'm referring to the last couple of quarters, let's say, we haven't seen a significant change or shift in the supply chain, in the choice of the supply chain. Not that, Howard. But certainly we have seen examples where maybe an end customer decides to have a bit more visibility on demand pricing, volume allocation. Yes. And in some case, maybe a desire for this end customer to consolidate the supply through fewer actors. Maybe some customer ended up having to source MLCC capacitor through a variety of channels, various distributors, various EMS, and in some case, maybe they started to consider to consolidate that and group it under fewer actors just for better visibility. But I wouldn't say that we saw a significant trend where a customer decides to build up its own supply chain and then therefore significantly structurally change the way it supplies product. These I've not seen, and this also would create quite a disruption in the supply chain. It's not a simple exercise. So I personally think that the distribution channel and the EMS channel will continue to play a critical role in the electronic component supply chain. They're hard to replace. You see, even today, our ratio in distribution continue to be extremely high, and there is a reason. There is a reason for that.
I see. But does this shift, does that impact Yageo in any way? I guess shifting more towards direct gives you better visibility from an end demand and capacity planning perspective.
Not really. No. We have a very sophisticated tracking system when it comes to our business. It's a combination of customer per number that are used to order the product, so not just the Yageo per number. And it's also the fact that we have access to point of sales record from our channel, so we know exactly where the product ends up, who buys what. And so we have developed over the last few years a very high-performing tracking system that give us full visibility and give us our customer full visibility of the Yageo products within the channel, no matter whether it's direct through distribution or EMS. That is a unique advantage because it gives customers great flexibility to secure long-term agreement with us without having to change the supply chain, without having to be constrained to how they decide to supply the product. It doesn't really change us direct distribution EMS. It's the same for Yageo.
Got it. Thank you. Can we come back to the industry level questions? So a couple here asking about your view of where industry level utilization rate is. I know you mentioned Yageo is 90% going to Q3, but what do you think the industry is right now?
We've seen some of the press out there, and we have noticed a number of, in particular in the MLCC space, there has been increase in utilization rate from most of our peers. So I'll just reference that back to that.
Got it. I think there's a view in the market where over the next couple of quarters there will be a lot of demand for high capacitance MLCCs that will ramp alongside the next generation AI servers, and that will cause a significant shortage in the mid to low end capacity because there will be more conversion of mid to low end capacity to support that high end, high cap MLCC. Is this something that you, the kind of conversation that you are having with your customers, is something that you guys are seeing as well?
I think it's a fair it's a fair characterization of where the demand is in terms of mix. Yes. And I would say it is expected to put pressure on the rest of the portfolio. I think that is a good way to describe it. And we feel that we are very well positioned to help customers with that piece of the portfolio too. So part of the conversations we have are also around that for sure. As you know, I always like to remind that Yageo took a bold step in establishing a very large manufacturing facility for MLCC in Kaohsiung, Taiwan, before this booming demand was in front of us. A testament to our confidence in us and in the market, and also a testament of our foresight to be able to anticipate the need that the market has.
Now that you mentioned Kaohsiung, can you remind us, how much of the design capacity utilized today, and if you were to add capacity, how quickly can that capacity come online?
Well, as we just alluded to, it's pretty tight, honestly, in the past several months, particularly the market demand is so strong. So we continue to see the increase of the UTR in this particular fab as well. The space was more or less ready. I think we just continue to put in anecdotal equipment sets to help to rationalize the whole production lines. We continue to do so. So this Kaohsiung fab, this YF3, is really a strong asset at this market junction.
And Howard, it is not only from the Kaohsiung factory. It's in general, because we see increasing demand. So as said, we have a number of pipeline capex expansion. So they will increase our capacity quarter by quarter. So some we will see in Q3, some in Q4. And we know now the equipment lead time is long, so we plan that ahead. So we'll gradually increase the capacity quarter by quarter to meet that demand.
Got it. Thank you. And with these capacity expansion plans that you guys have in place, is there any capex guidance for this year or next year?
We don't have an exact number, or we're not planning to give an exact dollar number guidances on the capex. But as my colleagues already mentioned, we have been investing more on capex, and we'll continue doing so.
Got it.
Yeah, however, I think several capex are in the pipeline already. So far through Sahab, we've only spent about slightly less than $3 billion, which is not a lot, but then we're able to make up some capacity increments here and there. And so larger magnitudes of increase will have to happen to meet up with the market demand as we continue to monitor. So do expect certain increments there for the second half. So far, the situation is pretty fluid, and we're remaining pretty flexible to address that.
Got it. Thank you. Are you able to give us color on which product segment you guys are expanding capacity? Like if you were to rank tantalum, MLCC, resistors, magnetics, which one are you guys expanding the most capacity to the least?
Well, pretty much across the board here and there, as David just alluded to. It's not just happening in Kaohsiung, it's happening in Vietnam, in Suzhou, in Mexico. It's pretty much across the product lines, honestly.
But certainly the leading one is tantalum and MLCC.
Yeah.
Got it. Thank you. And last question on channel inventory. I think this is something that you guys have commented on before. Can you talk about what channel inventory looks like at the end of Q2 versus Q1? And how do you expect this channel inventory will will look like by the end of the third quarter.
How do you mean the inventory in the channel,
Yeah.
right? Okay.
Yeah.
Yes. Yeah. Good development. We got the consolidated result for Q2. So the channel collectively continued to grow as a point of sales, key metric that we measure. And consequently, that helped to drain their inventory further, although they're trying to stock up the product. I would broadly define as, we segmented between local Great China distribution, global distribution, and high service players that tend to be mostly involved with online sales for design engineers. If we start with the Great China distribution, the turns are very high, about 5 turns. We have a couple of months inventory there worth of product, and it used to be 3 a year ago. So a year ago was very lean, and now is even leaner. So there, I think there is a lot of effort from that channel to try to stock up, just to be able to have the inventory ready. When you move to the global distribution, they naturally work with bigger inventory profile, and the month on hand there now is about 4, so that's about 3 turns. And a year ago, that was about 5, so also improvement there. Last, when you look at the high service channel, the amount of inventory, very different business model. They typically work around with 2 turns, and now their month on hand is between 5 to 6. And a year ago, that was about between 7 to 8. So I think that in terms of amount of inventory in the channel, Great China on the low side, global distribution on the right side, high service on the right side, everybody improving versus a year ago. So very, very healthy, very happy to see that.
Okay, thank you. Just one quick clarification before I let you guys go. On local Greater China, you mentioned 3 months a year ago. Sorry, what was the number for right now? I didn't catch that.
About 2 months on hand, equivalent of product. Yeah, about 5 turns, 6 turns.
Yeah, Howard, I'm conscious of the time because we got a plane to catch. So can we take the final question?
Yeah, no, that was the final question, and I was going to let you guys.
Oh, okay, that's good.
Thank you guys so
Thank
much.
you.
I know we have to be on time. So yeah, no, thank you guys. Thank you, David, Eddie, Claudio, and Gavin. This, in interest of time, this concludes our webcast today. Thank you, everyone, for joining us, and we will see you guys next time.
Thank you, Robert. Thank you.